I'll tell you something most young traders overlook, kid. Before you ever place a real trade, before you ever risk a dollar, before the market has a chance to humble you, there's a battlefield you need to conquer first. And that battlefield is backtesting. Funny word, isn't it? Sounds technical, sounds boring, sounds like something only quants in dim rooms with too many monitors do. But let me lean in and tell you the truth. Backtesting is where you meet the real version of your strategy, stripped of hope, stripped of excuses, stripped of the optimism that blinds every beginner. I learned this the hard way, long before fancy software and one-click simulations existed. Back in my early days, backtesting meant printing charts the night before and marking them up by hand, like some kind of archaeologist trying to decipher ancient patterns. I'd sit at my kitchen table, a cheap lamp buzzing overhead, the smell of burnt coffee lingering in the air, and I'd go, candle by candle, bar by bar, asking myself, would I have entered here? Would I have stayed? Would I have bailed like a coward? It was slow, brutal, honest work, and that honesty was the part that nearly broke me. See, when you're live in the market, you can lie to yourself. You can say you meant to take that trade, or you planned to exit early, or that news messed you up. But in backtesting, there's nowhere to hide. The chart doesn't care about your mood, your excuses, your hopes. It only shows what was, and your job is to see if your strategy survives that reality. I remember the first time I tried to backtest a breakout strategy. I thought I'd invented a mix of indicators I barely understood, sprinkled with a rookie's confidence. I went through 3 months of past data, marking every entry, every exit, every stop, and by the end of that night, I felt like I'd been punched in the gut. The strategy didn't just fail, it collapsed. Loss after loss, false breakout after false breakout. It was like watching a dream die in slow motion. That was the night I learned something painful but essential. You don't backtest to prove yourself right. You backtest to discover how wrong you are before the market charges you tuition. But here's the part most people don't realize. The pain of a failed backtest is a blessing. It forces you to confront the weaknesses you wouldn't see in a live environment until it was too late. And trust me, the market collects interest on ignorance. So I kept going, night after night. Strategy after strategy. Some blew up instantly. Some looked good until I tested them through a volatile period. Some worked beautifully in 1 year and fell apart in the next. But then, slowly, the process started shaping me. I began to see patterns in patterns. I learned that a good strategy isn't one that wins all the time. It's one that survives different kinds of storms. I learned to test through bull markets, bear markets, sideways markets, high volatility stretches, dull periods where the market moved like cold molasses. And I learned something deeper. Backtesting wasn't just about the strategy. It was about me. Every time I cheated, every time I said I probably wouldn't have taken that trade or I would have exited earlier, I wasn't cheating the chart. I was cheating myself. And the chart always punished me later, in real time, with real money. Eventually, I started building rules, clear rules so obvious they felt stupid. But kid, the market doesn't reward brilliance, it rewards consistency. My entries became mechanical. My exits became structured. My stops became non-negotiable. And the more rules I created, the fewer decisions I left to emotion. Backtesting taught me that emotions are the silent destroyers hiding inside every trader, and if you don't trap them inside a rule set, they'll burn your account down without mercy. The first time I ran a full-year backtest on a strategy that actually held up, really held up, threw everything the market threw at it. I sat there staring at the results like I'd found buried treasure. It wasn't perfect, but it was honest. It had losing streaks, drawdowns, stretches of boredom, but overall, it grew. Slowly, steadily, predictably. And that's when I realized something most traders never learn. Backtesting isn't about creating a strategy that avoids pain. It's about creating a strategy that can survive pain, because pain is guaranteed. Pain is part of the market's nature. Pain is the toll you pay for entering this world. What matters isn't avoiding it, it's ensuring the strategy lives through it. As years went on and technology evolved, I moved from hand-drawn charts to spreadsheets, then to software, then to platforms that could simulate thousands of trades in seconds. But you know what? The process didn't get any easier. Faster, yes, but easier, never. Because the hardest part of backtesting isn't the charts, it's the courage to be brutally honest with yourself, to admit your brilliant idea wasn't brilliant, to accept that confidence isn't evidence, to see in black and white how your emotions would have destroyed that setup long before you realized it. And the funny thing is, the older I got, the more I understood that backtesting isn't something you do once, it's something you do forever. You do it every time you tweak a rule, every time the market changes, every time you change. Because you will change, kid. The market will shape you whether you like it or not. And backtesting is the only place where you get to shape yourself first before you step into the arena of live trading with all its noise, pressure, temptation, and chaos. And it was through countless nights of those brutal, lonely backtests that I finally began to understand that building a real trading strategy isn't about finding perfection. It's about recognizing exactly where a strategy breaks, so you can rebuild it stronger, smarter, and more honest than the version you started with. Because that's the part no one tells you about backtesting, kid. The real purpose isn't to prove that your strategy works. It's to reveal the exact conditions under which it fails. And once you know where it fails, you're no longer wandering blindfolded through the minefield of live trading. You're stepping carefully, intentionally, with a map drawn from the blood and bruises of your past mistakes. I remember the first time I truly understood this. I had a strategy that looked perfect: clean entries, tight stops, beautiful risk-reward ratio. It crushed trending markets, absolutely crushed them. But in my arrogance, I skipped testing it through choppy, sideways conditions. Why bother? It was a trend strategy, right? Well, the market doesn't care what label you give your system. One stretch of ugly chop wiped out months of hypothetical gains in a single backtest session. And as I watched the equity curve crumble, I felt a mix of anger and relief. Anger, because the strategy wasn't the masterpiece I thought it was. Relief, because at least the market wasn't teaching me this lesson with real money. That's when it clicked. Backtesting doesn't just expose your strategy, it exposes you, your impatience, your blind spots, your wishful thinking, your tendency to ignore the boring parts of the market where most traders lose their discipline. Once I accepted that, I started testing in a new way. Not to find the perfect pattern, but to understand the personality of my system. Did it thrive in momentum? Did it die in consolidation? Did it depend on volatility? Did it get chopped to pieces on news spikes? I started testing every version of myself inside those charts. The impatient me, the fearful me, the greedy me, the overconfident me. And that's when the magic happened. The strategy I was building stopped feeling like a set of rules and started feeling like a contract between me and the market. A contract shaped by truth, not fantasy. Then came the moment every serious trader eventually reaches. The moment I tested a strategy across multiple years, multiple environments, multiple cycles, and it didn't break. Oh, it took hits. It went through rough patches. It bled during certain regimes. But it survived. And that, kid, is the only thing a real trader should ever ask from a system: survival. Profit is a byproduct. Stability is the foundation. Anyone can build a strategy that looks good in one type of market. But a real strategy, one worth trading with real money, has scars. It has history. It has been dragged through crashes, through boring summers, through rate hike seasons, through pandemics and panics and melt-ups, and it came out alive. The day I saw my first truly robust backtest, I felt something I hadn't felt since I started trading: a quiet confidence. Not the loud kind, not the dangerous kind, the steady kind. The kind that tells you, this might actually work if you don't mess it up. But even then, even after all those nights, all those tests, all that discipline, the journey wasn't over. Because backtesting teaches you rules, but live trading teaches you yourself. And trust me, the person you are in a backtest is rarely the person you are in the heat of a real trade. That's why the process never ends. That's why even decades later, I still backtest every tweak, every idea, every whisper of a new setup. Not because I doubt the market, but because I doubt myself, and that doubt keeps me sharp. So, if you're serious about this game, if you really want to build something that survives the chaos waiting for you out there, remember this: backtesting is the forge where your strategy and your character gets shaped. And someday, after enough nights spent facing the truth on those charts, you'll look back and realize that your first successful backtest wasn't the final step before going live. It was the first step toward becoming the kind of trader who earns the right to face the market with clarity, humility, and a strategy that exists not because you hoped it would work, but because you proved it over and over again, across every storm the past could throw at it, until you finally understood that backtesting isn't just preparation, it's